Hello everyone, my name is Hai. Today I'm going to talk about financial statement, especially in financial statements of the companies. We have four important financial statements. The first one is balances. We have assets, equity, and liability. And the second one we have income statement, and we have statement of transaction or statement of cash flow. And the last one is statement of free cash flow. All the free cash flow available for distribution to investor or to stakeholder. Yeah. But today, in this topic, I would like to review about balances. The first one and also the most important financial statement. So in balances, we have two important parts. The first one is total assets, and we have total assets equivalent to total equity plus total liability. So we're going to talk first about the total assets. So in total assets, we have two kind of assets. Generally, we have current assets and fixed assets. Current assets maturity is from 1 year or less than 1 year. Like we have here, current asset, we have cash equivalent, and inventory, account receivable, and short-term investment, which is investment with maturity less than 1 year. And we have fixed assets in total assets. Fixed assets like plants, long-term investment, building, plant, and equipment. So we have 2 years to consider, 2016 and 2015. I will take some number for more specific, and we can imagine how it works. For 2016, we have cash and cash equivalent equal to 50. Okay. Oh, sorry. Equal to 50. Yeah. We have a short term. We don't have short term investment. Yeah, we take a mark here. Account receivable. Account receivable, we have 500. Account receivable, we have 500. Inventory. Inventory, we have 1,000. Okay. And we have total current assets. Cash and cash equivalent, short-term. We don't have short-term investment. We have account receivable for 500. We have inventory 1,000, and we have total current assets is 1,555. Okay. Yeah. Yeah, we have total current assets. Cash and cash equivalent 50. We don't have short-term investment. It depends on the company, but many companies have short-term investment, but we don't have here. We have account receivable 500. We have inventory 1,000, and a total current asset that have maturity less than 1 year, equal to $1,550. Yeah, dollar. Sure. Also, we have current asset. We also have fixed assets in the total asset of the balances. In this case, fixed assets, we have land and equipment. Count for 2,000. So total fixed assets also 2,000. Then when we have total current assets and we have total fixed asset, when we plus together and we have the total assets, 1,550 plus 2,000, we have 3,550 dollar. Yeah, correct. According to the book, I'm making example for you. Okay. So this is part of the access. Okay. The same with 2015 and for REU1, but the simple example for 1 year. You can imagine how it's worked. So the second one, we will have you remember here we have total access for 2016 $3,550. And now we will go to the second part of the balances is equity and liability. We have liability and equity. Yeah. So in liability and equity, we have account payable. Not paper. Accrual. Yeah, accrual. And we have total current liability. We also have in the liabilities and equity. In liability, we have current liability and we also have long-term debt. Long-term debt here we have like long-term bond. Yes, long-term bond. Then we can calculate total liability. So and we have this all the part here if for liability we have short-term current liability or short-term debt, and we have long-term debt, is represented here is a long-term bond. And we also have preferred stock for either part of equity. Sure, we have preferred stock. Preferred stock. For example, we have a million share, 1 million share. And we have common stock. For example, 50 million. Yeah. We have in the equity we have preferred stock, common stock, and we also have retained earning. Then we sum across and we can calculate total common equity. Then we can calculate total liability and equity. This number must be the same, must be equivalent to the total assets here. Definitely. For example, in this book, we have account payable. We have 200 account payable, 200 for 2016, the same year. Account payable, we have 200. Note paper, we have 280. Accrual, we have 300. Then we sum across for account payable, note payable, and accrual as they represent for current liability. Equivalent to 780 dollars. So this one, a long-term bond, is long-term debt. We can take a note here. This one is long-term debt. Yeah, long-term debt. Long-term bond we have. Long-term bond we have 1,200. $1,200. So when we have total current liability, we have long-term debt, and we can sum across. We going to have total liability as 1,980. Yeah, we have preferred stock. We have 1 million share for preferred stock, equivalent to 100. Hundreds here is in million dollar. In million dollar. Yeah. And we have common stock for 50,000, equivalent to $500 million. Return earning, we have returning for 970. And In equity, we have, remember, we often have reverse stock, common stock, and retained earning. We sum across, we have total common equity is $1,570, and we have total liability here $1,980. Yeah. Then we sum across total liability and total equity. We will have total liability and cash equity here equal to $3,550. Exactly the same with total assets. Okay, so that's it, balance it. At some point when I calculate these things, we may have some question that how can we calculate account payable, note payable in the current liability, how we calculate long-term debt, long-term bond for the in the liability, and how can we calculate common share, preferred share, or retained earning. So the point I will talk to you later in detail for each of them. But today, in generally, I would like to introduce you everyone about balances. In balances, we have assets. In asset, we have two parts. We have current assets and fixed assets. Yeah, fixed assets. Then we sum across, we have total assets here for 2016. In this case is $3,550. In current assets, we have cash and cash equivalent. We have cash and cash equivalent. We have account receivable. We have inventory, so on and so forth. In fixed asset, we have like plant, equipment, building. These are our long-term assets. So, and we calculate total asset here, 3,550. Exactly equivalent, exactly the same with total liability and equity. So, in general, when we calculate for the balances of a company, balances of a company, we have total asset, equal to total liability and total equity. Yeah, that's right. Here in this case we have total assets for 2016, total liability, total equity for 2016 equivalent, exactly as the same amount. Must be equivalent, the same together. In this case we have $3,550 for total asset, also $3,550 for total liability and total equity. So that is balances. Yeah. Some case depends on the kind of company. For example, you are a real estate company, you are a information technology company, or you are a retailing company. It depends on, and uh, it will vary. It will vary. Some kind of current asset, current liability, long-term debt, total equity. But in general, the very general and typical things that we have in a balance sheet. See you later.